As of this moment, the markets are hanging on the success of Donald Trump's push to have the new healthcare bill passed. But what's the bigger picture here for the markets and the so-called Trump trade that has pushed some equity benchmarks to record highs? Joining us now is Jeff Moore, Senior Commissioning Editor at Global Risk Insights. Jeff, first, the markets seem to be fixated on the healthcare bill, but how does this fit into the bigger picture?
Yeah, I believe the healthcare bill is the current focus, but it's not necessarily representative of the larger picture. The markets, ever since the election of Donald Trump to president, have really bought into this narrative of a reflation trade. And every bit of his legislative proposals are going to be judged on whether or not they're viable. So this healthcare bill is really the first test of Donald Trump and his negotiating skills. And so a lot of that built-in money that is riding on the momentum of this reflation trade is going to be at risk of pulling out of those markets if he fails to actually get some legislation through.
Okay, markets quite often work in stages, in steps. So if the healthcare bill gets passed, so far as the markets are concerned, are we still on the reflation trade, or are there question marks already about the reflation trade because the fact he's maybe, some argue, perhaps maybe failed at the first hurdle to get this through quickly?
Yeah, I think if you see an actual bill come out of Congress that Trump is going to sign, you may see some relief rally in the U.S. markets in particular for him having accomplished something. But I think that will be short-lived because we're learning now that the speed and size and scope of the legislative achievements he was proposing and promising during the campaign and in the early weeks of his presidency are not going to be as easily accomplished as maybe the market hoped. So that reflation is not necessarily going to come through. Also, you've got some new dynamics with Congress that are going to introduce some problems with some of the other more stimulating actions that he's proposed, such as big fiscal and infrastructure injections and tax cuts. You've got a conservative wing of the Republican Party in the United States that are really the ones putting their foot down in front of this. And so even if we get past this healthcare issue and into taxes and then into infrastructure, which would involve a really big spending outlay, they may cause problems for Trump's policy there, and thus may cause problems for this reflation narrative that's been in existence since November.
So you see the tax issue as a more difficult hurdle or a higher hurdle for Trump to clear?
Yeah, I think they have a lot more consensus on the tax issue, but because of the troubles he's already seen on the repeal of Obamacare, this is an issue that for the GOP in the United States was a consensus issue for the last several years. They wanted to get rid of this. Now they have their hands on every lever of power in the U.S. Senate, the U.S. House, and the White House, and they're still having trouble getting through that. So it really portends badly for some of the other more aggressive things he was looking to do, particularly when you look at infrastructure and fiscal stimulus, because the same people causing problems for his agenda in passing this healthcare bill now on the conservative side of the issue are likely going to stand up and resist some of the spending measures that would be involved in a big stimulus package.
Okay, so in terms of capital allocations, as I said at the top, we've already seen record highs, in fact, across Wall Street for the major benchmarks, the Dow Jones Industrial Average, the S&P 500, the broad market index, and also for the NASDAQ, and also we've seen the Russell 2000 lift off like a rocket as well. Which market should we be mindful of if we see an unwinding of this trade?
I think first and foremost, you're going to see that weakness in the Russell 2000 and some more of the small cap names. They actually had come in a little bit more aggressively every time the Trump narrative, that Trump trade has faltered, because when you look down to the real nuts and bolts of the U.S. economy, small businesses are really going to drive that, and that's where the problems are going to show up first. So I would be cautious around the Russell 2000, but really the entire market has been built on this momentum behind this reflation narrative to the point where they are all in one direction in this momentum. So when you see this falter and the momentum slow down, a lot of this money that has got really hard triggers set around it, when it loses that momentum, they're going to start reallocating and pulling money out. So you could see some quick downdrafts if they run into serious trouble. And moreover, if the reflation narrative just deteriorates to the point of causing a lot of soul searching among portfolio managers, then you may see a considerable repositioning in the markets as everybody tries to recalibrate what this means for the future of the U.S. economy and the U.S. markets in particular.
What about the dollar trade then? We've seen the dollar rise. I know this is something that Donald Trump has said he doesn't necessarily want, but to some degree that's a part of what he was trying to do. We've seen the dollar come off recently, but ultimately, if we get the reflation trade unwind, where does the dollar go?
Yeah, and I think actually you've seen some of this dollar movements affect the markets recently, where the dollar moved very strongly upon the Trump election and into the new year. But in the first couple of months of this new year, while U.S. equities have continued their push higher, the dollar kind of leveled off and came in a little bit. The gap between the dollar and the markets got pretty big late last week, and you saw Tuesday in the U.S. in particular that the U.S. equity markets caught up with the dollar and had a really big down day. A lot of people have put that onto the healthcare bill and developments in D.C., which probably causes some momentum in that favor. But a lot of this correlation between the dollar and the markets is going to continue. And so if you see the dollar continue to get weaker, you may see equities kind of following along with that. Donald Trump has mentioned that he'd like a weaker dollar in comparison to some currencies. Some have suggested that he was talking specifically about the yuan. So he may like that. Also, it mixes stuff up with the Federal Reserve and their rate increase schedules, because the weaker the dollar is and the higher the inflation numbers come in, the more aggressive they may be at raising rates. So that could cause some more problems down the line.
So where is there then safety? Where is there safety in the markets that one should look for if this does start to unwind?
Well, you have a really large short position in the U.S. Treasury market now in bonds, especially in the belly of the curve around the 5 to 10 year duration level. A really historically large short position there, betting on rates rising. So if the dollar does come down and the equities come down too, you may have people looking for safety in those Treasury notes. And with a large short position, that may cause an extra squeeze to have those rally further. So I believe if you are cautious and questioning the Trump trade, U.S. Treasury bonds may be an area to seek some shelter, because with the large short positions, you may have wind at your back should the equities start falling, and the negative relationship between bonds and equities kind of reemerge after a mixed up correlation over these past few years.
So where does gold sit in with this?
Well, gold is interesting in that it's a lot of times viewed as an inflation hedge, but not necessarily following that performance tick for tick. Gold would probably benefit mostly if the whole narrative fell apart to the point where indices and capital markets around the world got into really scary areas that induced some sort of panic selling, especially by retail investors, and they're going to see gold pop. Also, if the dollar keeps coming in and unwinding the Trump reflation trade at the same time, then you may see some upward pressure on gold and some of those other commodities that could cushion the blow. But I don't see any meaningful spikes in that commodity in particular, one way or the other. But it should serve to protect you if you've got some of that inflation coming in the future.
Jeff, very briefly, just as a final question, we've spoken a lot about the potential negative out of all this. Where do you sit with this? Do you think that we should prepare ourselves for the worst, or do you think that in fact we won't actually get to that stage? Do you think that the US will be able to cover this and to be able to get through it somehow?
As far as the politics, it's going to be a long and tough road ahead. People often view the president, in some ways rightfully so, as the most powerful position in the world, but he is really at the mercy of the Congress within the United States, a system of checks and balances there. And we're seeing the results of that in these last couple of weeks with the struggle to get this legislation through. As far as the equity markets are concerned, it's concerning to me that so much money, so many trades and even automatically placed trades are riding on this momentum, where if there's any failing of that narrative at all, the valuations are already so high, and we've gone so long without meaningful corrections that it could really hit an air pocket and damage the value of equities significantly, to the point where it really worries retail investors who have been getting into the market recently, after the election of Trump, we've seen retail inflows into ETFs, S&P 500 ETFs, been at pretty awesome levels over the last couple of months. If those investors and retail investors start seeing red in their portfolio, they may panic and head for the exit. So I worry a little bit about how fast we've come without a meaningful correction, riding so much on political developments, because that political risk can change day to day.
Look, Jeff, it's a pleasure. Thanks indeed for joining us. So it's Jeff Moore. He's Senior Commissioning Editor at Global Risk Insights.